The Rebel Capitalist Show. I was listening to one of your earlier podcasts. It was sensational. And you really kind of dissected the fractional reserve system and then your objective to try to create something that didn't comply within those standards. And can you kind of explain that a little bit further?
Yeah, so when I first started discovering the real problematic side of the banking system, I broke it down to three problems and tried to find a way to solve those problems, but failed. The first was when you deposit your money at a bank, the bank legally becomes the owner of that money.
Right.
And the second part of it is that when they become the legal owner of your money, they can essentially spend it as they choose. They can redirect the flow of debt, and they can use it in order to redirect to what they consider the lowest risk, highest return asset classes, like real estate usually. The third problem is what we're experiencing, or is getting attention right now, is that the money supply is essentially a function of debt. So the money supply is a function of finding new markets for debt and the bank's willingness to lend depending on the credit risk at that time. And so you have this ever expanding money supply. What I wanted to do with the whole non-fractional reserve bank was find a way that people could own their own money, people could spend their own money, and it was based upon non-leverage, that the assets you don't have to lend money in order to create new money, and we try to find a way to do that.
Okay, so how would it work for lending with a banking system that wasn't fractional reserve? Because I mean, obviously, you know what most people will say is, "Oh, that's impossible," because the money supply wouldn't be able to expand with the economy, and therefore it would hamper future economic growth.
Yeah, so the important thing to make a distinction between is money created as debt and debt. There's nothing wrong with debt itself. If somebody earns money and lends money and wants to receive yield on that, then that's a great innovation. There's many products that can allow for that to happen. But it's when you conflate, if someone were to say, let's create a monetary system from scratch, I don't think anybody would have come up with the system of, well, let's allow the private banking sector to create new money every time they issue a loan.
Right, exactly.
And by combining those two forces, you end up with this crazy Ponzi-like system, whereby in order to have more money, you have to have more debt. If you want less debt, you have to have less money, and then you have all these mechanisms to try and stimulate and the business cycle in between. But the reality is it's pretty simple. More debt equals more money, which equals more growth. Less debt equals less money, which equals less growth. Who should actually be in charge of creating a nation's money supply? If you think about it, fractional reserve banking was really a capitalist free market solution to money creation. It was, let's give it to the private banking sector. And so many Austrian and libertarian economists or ideologists see that as fractional reserve banking being the enemy, but actually it's a more private form of money because you're outsourcing it to the private banking sector. Now, obviously, there's crony capitalism there, and there's very few organizations that actually get a banking license, and therefore it creates this, oligopolistic type of behavior that is then subject to crony capitalism. So it's not quite a free market solution, but it's a more free market solution than actually governments creating money. What are we seeing at the moment? In order to inject more money into the system, the Federal Reserve is creating some money, or the central bank is creating some money, and then they're using that in order to purchase bonds. But the government is really indirectly creating money, but borrowing it. That just adds a bunch of interest into the equation, when really it could have just been created direct by the government without actually having to borrow it. And then you could have a real transparent form of money, which wouldn't be subject to all these, indirect maneuvers to try and stimulate the money supply. And it would be a lot easier to judge a government on whether they screwed up their currency just by a system of governments actually creating that money. Now, couple that with competing currencies, like Bitcoin, then you have an opt-out system, because I think, and I think that's what we're moving towards right now with these central bank digital currencies, is that you are going to see governments actually taking back the ability to create money in order to bail out the economies, and different parts of the economy. And then that competes with private forms of money like Bitcoin and gold as a store of value. And you have these competing systems. And I mean, there's don't get me wrong, there's some real big problems with governments creating money, and we can go into some of those. But at the moment, we are in a Ponzi scheme. And that's why on my YouTube channel in 2010, I published a video called The Great Depression of 2020, because it's just tracking these trends,
Right.
and recycling and financial engineering.
So if government is creating money directly without the Fed having to monetize it, so we kind of change the system a little bit, they're just basically, the Treasury is just spending money into existence. And I think a lot of people would argue that they already do that. But then to decrease the money supply so we don't have this hyperinflation, then they've got to tax it out of the system. So if inflation does run a little hot, then they've got to increase taxes. Is that how it works? So you see that as one system, but then you also see people's ability to opt out of that system. It's like, wait a minute, I don't like this. There's something that smells fishy here. Then they can move over to a gold-backed system or maybe a Bitcoin type of system. Is that how you see the future playing out?
Yeah, I think we're going to see governments issuing central bank digital currencies, or the government's just issuing those currencies direct, which are going to be debt-free. And the way that I think that's actually going to happen is, let's just look at where we are right now. So you've got this mountain of debt. You've got people that are depositing money at banks. You've got insurance schemes that are on the hook for way more money than they actually have in those schemes, with deposit insurance schemes. So I'm forecasting the next, the real catalyst effect for us moving from a financial crisis to a depression is going to be when people stop paying their mortgages. And with the levels of unemployment we're seeing right now and the levels of bankruptcies, and what we saw in the lockdown was people choosing between, feeding their families or paying their mortgages, or, paying their rent. And that has a knock-on effect on the tenant, the landlord that needs to pay the mortgage. Then you start to enter a 2008 style system. Now, the banks have either done two things. They've either taken on that risk directly, or they've sold it to your pension or other non-bank institutions. So we're not 100% sure where all the risk lies. My guess is it's somewhere in between. It's non-bank institutions and bank institutions, and each bank will be slightly different. So imagine we enter another scenario like 2007-8, where a bank needs a bailout. I think, as we've seen with the social unrest at the moment, if we couple this with with another banking bailout, it's just the appetite to achieve a banking bailout like we did in the confusion of 2007, 2008. I just don't think that people will allow that to happen, and there'll be just so much unrest on the streets. So what other options do they do if they get in financial difficulty? Well, they could do a bail-in, but then that's like the end of your bank. What I think is going to happen next is, I think that either governments or central banks are just going to let the banks go bust, but then find a way of consumers not losing their money. And one way to do that would be to get them all to download an app. And on that app, it just simply has the same amount of money that you had at your bank account. But in order to get it, you have to download this app. And it's the same money supply, but a different money supply. It's not debt-based money. It wasn't created at a bank through a loan. It's just simply replacing one form of money with another, which, if it was done in proportion, is non-inflationary, non-deflationary, just replacing one form of money and taking out all the interest that makes an inefficiency in there. And so I think this is their last monetary tool. where I think they'll just simply allow people to download this app, have this digital currency, and then essentially that's central banks waging war on retail banks. They don't want to be in the business of retail banking, so they'll open up technology, their API keys, and allow financial technology companies to build applications on top of it and deal with all the customer service part of it. But I think you're going to see financial technology companies building technology on top of central bank digital currencies or government currencies if they want to take out the central bank too, and a radical monetary renegotiation as a result of this health crisis, just chucking absolutely everything at the financial system.